The Hedgeless Horseman here. It's August 14th, 2024. First of all, thanks to the sponsors. Looking at markets, well, gold is high as we know. A bit of a retrace today. Silver down a bit. Crypto appears to be going down. Broader markets have recovered from the recent, few days of a downturn. But not much, in terms of change. Obviously, gold price is very, very high. Gold mines are worth a lot today, contrary to what's suggested in the junior sector. Silver has, it's not super high, the silver price, obviously, since it's still almost half from the 2011 high. But I remember a time not long ago when, silver traded around $20, $14. Anyway, so this video will be mostly about, you can call it copium. I'm gonna just call it common sensium, and betting on history, betting on the inevitable, betting on that a cyclical sector will be cyclical. So I had quite a lengthy argument with this person on Twitter today. He was complaining that, I don't know, he first of all, I think he misinterpreted a lot of what I said, but the gist of it is that, well, I posted something about gold. I was I was what's the word? Facetious, I think it is. Posting a shocked woman, and I wrote something about, gold is down to 2,493, the futures. So I'm making fun of the fact that gold price is so high, but when it goes down, I just want to make fun of it like it's a big deal. But he, I don't know, he got kind of triggered by that and started to rant on about, I don't understand how more people can't see that the gold juniors are tied to silver, not gold. It's meaningless what gold does, etc. Completely, which is kind of interesting. I think I've seen him comment quite a few times on my post, and still I don't think he understands that I'm a value investor. So I said that, well, if you're a gold investor, I think if you're investing in gold companies, I think you should be more focused on the price of gold. The fact that, hey, this developer or whatever has a project with gold. Gold is the thing that would sell. That gold would be the business that this company would be in. Gold mining, gold selling. So obviously it doesn't matter what the price of silver is selling for. If the project has no silver, it's selling gold, then I care about what the price of gold is. But he couldn't seem to get that point. So, and then we talked a lot more. So it's pretty obvious that he's a momentum trader like 95% of people. So I shouldn't be surprised, I guess. But it's still quite fascinating to me that the idea of being that value is something different than price is like foreign to most retail. They don't see any connection at all. They just what stock. I just want to own what stock is going up right now, or rather what's going to go up. And typically they're betting that it's the one that has already gone up a lot. That's momentum trade. They see a trend, they jump onto the trend when a lot of people already made money, and they catch whatever part of the up leg, let's say. They're betting that a trend just continues, and that's basically what every retail investor is trying to do all the time. Never be in anything that they think can go down in the next week or month, let alone year. God forbid. And I was pointing out, some I was going to say, I mean, again, as a value investor, it should be a crime if you know anything about gold, the gold mining sector, whatever. It should be a crime to not buy gold units right now, because they have never been more undervalued than now relative to gold. The gold business itself has never been more valuable, or the delta between the price you can buy gold projects and the value of the gold projects have never been higher. So for a value investor, you should be the longest you probably anyone has ever been in the last 40 years or something. I mean, if you listen to the veterans, they say they've never seen this before. So as a value investor, it's a no-brainer. I mean, you can't even. I mean, if you're not bullish and you call yourself a value investor, that just doesn't make any sense at all. Obviously, he's not a value investor, and he can't see why anybody would buy something, let's say, in a downtrend. For the simple reason that it's in a downtrend. And then I pointed out that, Joe Schmo is not touching this sector. Joe Schmo never wins. And you can see it all the time. I see it on Twitter constantly. And again, as I pointed out before, nobody, I saw one guy, I like that guy, but I saw him, it's like, if the juniors haven't moved up by September, he's going to sell all his juniors. I'm not sure if he's gonna do that or if he's just venting, but my point is, as I've said a lot of times, note that it had nothing to do with the opportunity per se, what the value is or price. It's just that if they haven't moved up, I'm gonna sell. If I haven't made money in the next month on these, I'm gonna sell. And again, this is in a period where you listen to the billionaires who said they've never seen anything like this, and they are buying gold juniors. They are buying gold companies. You see Pierre Lauzon with Orla. He's bought up 2 Nevada gold projects in the last 1 or 2 years. Frank Gustra is putting money into several gold juniors, mostly developers. You see McEwen, Rob McEwen, he's investing in gold juniors. You see Sprott starting to invest again, also in gold juniors. And Rick Rule, obviously, he's started to beat the drum quite, the last few months about gold and silver juniors. And he had his conference, and most of those companies, I think, was gold, silver. So you have the people that have made a lot of money investing. They are saying, what they are saying, this is the best opportunity to buy that they've seen in 30 years. And what are they doing? They are actually buying. So I just pointed out the fact that Joe Schmo is not touching this sector. Again, look at the volumes, look at the lack of buying, look at the sentiment on Twitter. It's like 90% of the stuff I see is basically shitting on juniors and how they wish they never found this sector and all of that. So obviously 90 or so percent cannot even realize that this might be the best opportunity anyone has seen in 40 years. And it doesn't mean that if you thought the sector was cheap, and I'm going to get to that Frank Gustra started talking about how cheap this sector was in September last year. Just because it's kept getting cheaper doesn't mean that it wasn't cheap. But most will see it that way, that as long as you're down on anything, you made a mistake. That's just how people operate. Again, it's always in the short term, because there are stocks obviously that go down for 3 years and then they go up 40-fold. Or how this sector operates overall, that it goes down 80% of the time and 20% of the time you make it all back and then some. That's nothing anyone seems to be aware of. Everybody thinks that, it's so easy, I'm just gonna buy when they go exponential. Easy peasy. Lemon squeezy. That's weird, because everybody's after that, and almost nobody makes any real money over the longer term. I bet there's millions and millions of people that have better portfolio returns than my portfolio over the last, let's say, 4 years, or 3 years, or whatever, the tech bubble, let's say. Why? Just look what has happened in the broader markets. Just look at what happened with Nvidia and tech and stuff. There is, let's put it like this. Making money over a few years means nothing. Losing money over a few years means nothing either. I actually made some money, I think, in the 2011 gold bull. I bought some 3x leverage gold certificate. I just held it for a few days, but the trend was so strong. I just held it for a few days, whatever. In hindsight, obviously, okay, I'm using leverage when something goes exponential, and that obviously can work for some period of time. But I was buying close to the top in gold. So fast forward, it's like you would wish you would never been there. But back to this point. Billionaires are buying stuff right now. Billionaires tend to win big, and he, I don't know, he just, this is what I find funny. It's like, I know my returns. I'm 99% sure I have better returns than this person. But he just points out, it's like, Joe Schmo has been decimated by touching this. He's obviously, I mean, the whole thing is, I'm pounding the table, and I have been pounding the table for, I mean, increasingly so over the last 2 years. So one could say I've looked dumb over 2 years for the sector overall. That's obvious if again you just look at what the sector overall has done. Joe Schmo has been decimated by touching this sector. Billionaires can lose millions and millions. It won't matter more than a sit. Just because rich people are buying doesn't mean much more than they can afford to get smoke out of their position. Retail. I mean, there's a lot of stuff I disagree with this guy about, but like, look at. I mean, I use this as a case example of how people think. I think this is pretty good. Joe Schmo has been decimated by touching this sector, and later on he referenced, well, nobody's made any money over the last 4 years, for example. Obviously, if you held the sector, bought it in 2020, you will have been decimated, right? Joe Schmo has been decimated by this, by touching this sector. Meaning, and I was gonna retweet it, I didn't. I think I canceled the tweet, but it's like or point one could say that he's like, if you translate this to what it actually means, what he's not that this is exactly what he's trying to say, but what he's saying basically is, Joe Schmo shouldn't buy low because they bought high. That's literally what this means in practice, or his point in this case. No. You shouldn't be buying stuff right now. Because you bought high. So you shouldn't be buying low because you've lost money. Okay, good to know. It's like saying, well, buy Nvidia at the PE of 300 or whatever, because Joe Schmo has made money on it. Then fast forward 3 years and see what happens. Billionaires can lose money, can lose millions and millions in one border more than a sit. This is just crazy. It's like, basically he's saying, well, you shouldn't really put any weight in what the rich people are doing because they can afford to lose. Then my follow-up question would be, well, how did the rich get rich? Maybe because they made above average decisions. Maybe they bought when nobody else bought. Anybody who's not a billionaire or ends up being a billionaire. There are very, 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 very few people in the world that are billionaires. So they do something that very, 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 very few people do. What could that be, for example? Well, buying right now. But apparently it doesn't matter because these billionaires are just pissing away their money. I mean, you cannot make this stuff up. It's not like every billionaire is going to be right, or look right on every investment decision they do. in this sector, you don't need to be right that often, and not on a case-by-case basis, since it's high risk, high reward. But it's like you have the Rick Rules, you have the Pierre Lassans, you have the Frank Gustras, you have the whatever McEwen, Ross Beatty, all the ones who are rich because they bought cheap, waited maybe 3 years, 5 years, then they sold the stuff they bought cheap for a lot more than they cost to buy. It's just, I don't understand. I mean, so what if someone is 100 million? And let's say he puts 50 million in or whatever. I could be a retail guy with $10,000 and I could put $500 in or whatever. Well, that's almost, I was going to say, meaningless to me, because it's only 5%. But not even that, I guess you should do, because, quote, you can afford to lose. I hope you understand my point. I mean, this makes absolutely zero sense. Absolutely zero sense. Don't buy low because you bought high and now it's low, so you lost money. So don't buy low. Well, what happens if you start off buying low instead of buying high? What happens if you actually do end up investing more, at least, when the sector has been decimated, than before it will be decimated? No, you can't do. Don't buy anything that's gone down. No, of course not. And I say it all the time. It's like the how you compound a mistake is by buying high then selling low. In a cyclical sector, it's a broken clock. It's gonna come back. It's always gonna come back. There's 100% chance we're gonna have a major rally in gold juniors, in any junior. Heck, I mean, you could probably make a lithium-only portfolio, given how much they have been smacked down. Sure, it might take a few years, but I expect if you buy some high quality, you're probably going to make money on them. Same with copper juniors, same with silver juniors. Anything that's really cheap and bombed out, wait a few years and you're going to make money on it. That's just how this cyclical sector works. It is a broken clock. So yeah, I just, there was some other, I mean, I think he, basically this, gold investors, wait, buy, when it's gone up. Oh, I forgot. He said, basically that he was in, I made bank on SMCI, Nvidia, whatever that is, over the last several years, not wasting my time in these brutal miners. And I'm ready. I'm feeling very good. I will buy 80% lower than 99% of your followers. So that's what he's telling himself. I'm not missing anything. So it's like, note what has he been in? The hottest stocks over the last 3 years. I assume these are the hottest stocks. So it's obviously a momentum trader. Been these names since COVID hit, I'm doing fine, easiest money I've ever made, to be honest. Okay, 42, he got in during COVID. I mean, if you read the stories, a lot of people started day trading during COVID because they were laid off or whatever. So I assume since he's 42, and especially given that not much of what it says makes sense, so I'm assuming that he's not a, let's say, career investor trader. Started probably investing when he was in lockdown, let's say, like everyone else. Jumped on the hottest stocks there is, made money, easiest money I have ever made, to be honest. I mean, of course, that's super easy to say, afterward. That's one thing. It makes me think about Jordan in the documentary, where he says, it's easy to talk shit when you're ahead, when you're up a few points in a basketball game. But it's like, if you talk shit when you're even or you're down, then you're a real man, somewhere along those lines. Because that's the thing. It's like, I think I'm gonna make the easiest money of my life. He made money when it went fine. Let's say he was almost Yeah, I mean, he made bank on, maybe he was in 3 stocks or something. I've seen people on the Swedish finance Twitter. Some guy was all in Nvidia, some guy was all in Tesla, for example. So again, there, it's not impressive that you can make money in hot stocks in a big bubble for, let's say, 3 years. Plenty of people made money in Bitcoin, over X amount of years. Some people made a shit ton in Dogecoin. That doesn't mean that we're going to be hearing about them 10 years from now, because they don't really know what they're doing. They jumped on the hot thing in a obvious bull market. Um, uh, 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 well, yeah, and then it's like he apparently is a lot in cash or whatever. So 20% position in miners. Uh, I felt okay. I feel okay missing 100%. Let's be real. In a true bull junior market, we'll see 1,000% moves all over the place. I don't disagree with that. Everywhere. I don't care if I make 8 to 900% in instead of 1,000%. So that kind of tells us that he has no idea that future returns go exponential at lows. Case in point, he says he's okay with missing the first 100%, for example, and he's going to get the 1,000% or 900% instead of 1,000. Okay, let's see. This is when Bear Creek went up. Yeah, 100%. Let's see. I hope we get the same level here. So this is extreme. This is the biggest rally, obviously, but that's 1,940%. Let's say you held off and waited. That's 928. So he appears to think that he can wait for whatever. I mean, some juniors are already up 200% from the lows, which I told him earlier. It's not every single. It's typically the absolutely highest beta that are down 80 or 90%, let's say. Some are up to 300% from the February lows or April lows, maybe. But so again, he obviously doesn't even understand that if you wait for them to go up, 200%, you're not giving away 1 or 200% upside. No, you're giving away hundreds and hundreds of percent upside. If obviously nobody's gonna buy the exact low here, so I mean it's just an example. But obviously nobody knew this was the low either, so he's kidding himself by saying that, oh, I'm just going to buy when everything is fine and dandy. Because I'm going to get to that later. But think about this. So if you pay 100% more than the guy that bought the bottom, you're not giving away 100%. You're giving away almost 1,000%. I'm just saying. The big returns, it's not people see this and they think, oh, I'm just going to get in when we're clearly in a bull market and I'm going to get my 160% or whatever. When momentum traders get in, we're going to be up 200-300% from the bottom. And he actually talked about, well, since 2020 there's been like four different times where there have been kind of false breakout. Let's assume that we're looking at let's say Bear Creek is the junior sentiment proxy, or the beta junior sentiment proxy at least. So this is a move of 109%, 200%, 200%. So there's been 100% rally, 200% rally, 200% rally. And again, he said, there's been a few false starts. I thought this actually was the low after the sector started ripping, because it's kind of, it touched a level which typically sees, fat rallies. Here we actually had a major bottom. Short went a bit lower here, but this was a major bottom around the same price. Not that I chased. I didn't change anything. I was already 100% long here. But so again, and if we are to believe him, let's say he did not buy this. Let's say he figured out that these were false breakouts, that this was not the actual bottom of the sector, and this was not the actual bottom of the sector. So he gave away up to 200% theoretically from the lows because they were false start. Then the question is, okay, so how much does it have to go up before you know it's the real deal? If you didn't buy, again, according to him, maybe he bought here and then sold. It's like, we don't know. But we're just going to use his, what he said, basically. So, okay, this is a 200% return. When is he going to buy? When it's up here? When does he possibly know when the real bull market has started? When did anybody know at any freaking point in time that the bull market had started? Nobody knew. When did you know the bull market had started here, for example? Why wasn't this just a dead cat bounce? Do you think people that are momentum traders like, oh, they're dying to buy here? Well, let's say they do that. The first thing they get is minus 44%. Do you think they're gonna, oh, yeah, sure, this is just a correction? No, they're momentum traders. That's the thing. So it's like, when has this gone up long enough for you as a momentum trader to get in, let's say? Because let's say Bear Creek is going to hit this black line one day. Okay, if you buy in after, it's like, oh, 400%. That's not bad. That's not bad at all. Okay, how much was it from this bottom? Oh, 1,880%. Oh, okay. Sure. Instead of somebody that's like stock picked and it's like, oh, I go through, again, I don't own Bear Creek Mining. I don't like, typically the pure beta. But it's like, let's say you do the due diligence. Let's say you know that this is the cheapest sector it's ever been. And you're averaging down. You're putting more money. You're not waiting for the sector to be up 300% and catch whatever 400% or 500 or 200, 300, 400, 500. No, you want to be a part of these friggin' massive bull legs, and this is a bull leg, not even a bull market. 650%. Again, when are you gonna buy? When does anybody know, including anonymous people on Twitter, that this time is for real? This is the actual bull has started. Take this for example. When are you convinced this is a bull market? Maybe here. So let's say you buy here because it closes above this trend line on that day. Okay, you buy here. Okay, so you're first up 29% good and then down 67%. What are you gonna do when this happens? You're probably gonna sell if you're a momentum trader, because now all of a sudden the momentum is down. Okay, so you sell, and I saw and heard about trading services that recommended selling down here because it broke resistances. Okay, so you buy here thinking, oh, now it's the real deal. You're up 26% before it keels over and you're down 67%. Or whatever level you're going to throw in the towel. Let's say you throw in the towel here. Okay. Yeah, okay, you missed 50%. You're not going to buy because you're going to wait for the trend to be obvious again. So when is that? Up here? When it breaks up here? So this, to me, this screams of a guy, for example, just to put it into perspective, because this is what I hear all the time, and you can kind of follow that, or you can kind of assume what his investment career has been. Probably went full risk on during whatever COVID or something. Maybe he was laid off, let's say. Put everything on momentum trades like everyone else, piled into the hottest stories out there, and now all of a sudden he's like, I know how to make money. This is how you do it. He even said something like, and this is like, who in the right mind expects to catch the bottom? It's impossible. It's like, where do I talk about catching the bottom? My point is, take First Majestic. If we pretend this is the sectoral rule, I don't own First Majestic, but how long? What do you mean catch the bottom? Okay, up here, every single buy within this blue box was in the green. Up here, every single buy anyone had ever done in First Majestic within this box, you would be in profit. Where on earth do you need this kind of precision, like catching the bottom? The funny thing is, he thinks, I don't know, that I'm greedy or something, where in reality it's him that's greedy. I mean, who cares if this is the bottom? You started buying here, yeah, you're going to be down first, but it's like, it doesn't matter, you're going to be up a shit ton anyway. So it's like, at the end of the day, you don't know when these momentum traders are going to get in, but if you just average down when these guys jump in, and then they are, want to make 200%, you already made 300% from the bottom, and if you hold long enough to the top, and let's say they are long for the top as well, you're going to make more than them anyway, and that's what they don't understand. This is Stellar Gold, for example. I think this is a pretty obvious. This is very high beta right now. I think they're up to 18, 19 million ounces. Okay, this is red, whatever. Minus 91%. And this is what I talked about when I added some silver juniors not too long ago, because they were down 90%. I mean, the Fire Silver, for example, that popped what? 300-400% or something. So that's 861. And again, I know that it's going to feel like, oh, we're all going to get rich, so I just want the 861%, please. I've never had so far 861%. Not even from a low. Okay? Not even from a low. Typically, my portfolio has gone down 50% during the lows here, during the COVID crash, whatever. Then it goes up some 300-400% or something. So my portfolio doesn't, again, I'm not in just on the 800% returner. So it's like, oh, okay, I sold the top, of course, like everybody else does, because it's so easy. I'm not going to be in until I exactly know when the real rally begins. And then I'm going to get 800% more. So it's like, according to my calculations, I should be up, No. My portfolio goes something like this. Up to 300%, down 50%, up to 300%, down 50%, up to 300%, whatever. That's how my portfolio goes. So it's like the people who think a minus 50% return in this sector is such a thing that you can't be a part of. It's like you have no hopes if you're down 50%. They have no idea what they're talking about. There's not a single rally in juniors, not even a bull leg, that doesn't go much higher than 100%. And I know everybody else has been making money anywhere else, basically. And it's like, people who made 300-400% in whatever, Nvidia and some of those stocks. It's like, yeah, wait and see what their portfolios are going to be like in 10 years. What's the saying that, Rick Rude's famous saying? I don't mistake a bull market for brains. And a lot of people suggest that it's best if you start investing in a bear market and get your teeth kicked in, because that's going to serve you for life. I started investing in late 2015, so I only got I started investing around here or something. So in hindsight, yes, very good timing in a sense. But note where I was willing to buy. I was willing to start buying when the trend looked like this. So immediately, I mean, I have to take credit for that in the sense that I actually bought the most obvious downtrend the sector had ever seen for the last X amount of decades. This was the worst bear market the sector has seen in a long time. And I bought that. I bought that. A beginner. But I came in with the right mindset. I came in as a value investor. So I'm not going to go in and buy a sector that has maybe gone up here. I hope not. That had gone up here, and I start buying. I start buying up here, ready for this. No, I actually started buying the most depressed sector, the most depressed junior sector anybody had ever seen in a long time. That was prudent. That was common sense. That was contrarian. That was value investing. So I started off doing the right thing, but that doesn't mean that the first 4 months my portfolio was minus 54% actually. So in 4 months, unlike every other guy that's made money in Nvidia, which everybody's envious of, I had cut my portfolio in half in the first 4 months. Do you think that's so easy to do? It's like, first of all, you buy the ugliest downtrend there ever is. Let's look at it daily. Actually, it looks even worse. So imagine you're seeing this downtrend, and I started to buy here. How many people in the world? Nobody expected the juniors could ever rally at these lows. Nobody. That was an impossibility, but because nobody had seen a decent rally, especially since, or at least since 2012. Nobody thought the juniors would ever go up. So I started buying, and I bought all the way down to minus 54%. Didn't even try to pick the bottom. I just bought and bought. I remember the day of the low though. It broke this resistance. Gold and silver was only down 1.5%, but some of the juniors absolutely got slaughtered. Well, okay, that might be an exaggeration, but it's like 10% down. I remember silver standard was down like 10-12%. Again, nothing to do. They had a lot of cash. Nothing to do real. They were not close of going bankrupt or anything like that. But it just got slaughtered. Why? It's not that value went down so much because silver was down 1%. It's because people thought they would go even lower. So everybody who's talking about they're going to buy D low, they're never going to buy D low, because at D low they're going to be waiting for the next low. Trust me. Let's put it like this. Again, let's say you have some dude, he's up 2%, 200%, high risk. He's in 3 stocks or whatever. And you can be envious, like, oh Jesus, this guy is, he's been in tech, whatever, and he's like, I feel so smart. I've had all these tech gains since I'm a momentum trader. I'm not a dipshit idiot like you value investors who average down in a cyclical sector. No, that doesn't make any sense. Why would you even risk that kind of stuff? So they're going to be waiting again for the coast to be clear. And again, who knows when that is? Again, why did it stop here? Why didn't it keep going like this? So what happened with everybody who bought here? Again, they got slammed. Why wasn't this the start of the next bull? 56% up, that's not a bad, that's quite a run. Well, if they did buy, within what? A month, a few weeks, they would be down minus 51%. You don't kid yourself. And don't believe the bullshit on the internet. Nobody's gonna know when the bull is quote real, and it's not gonna, it's not a false start. It's not one of these, or it's not one of whatever these, for example, or not one of this or that or what have you. Nobody knows that. And basically what they're saying, if they according to them didn't buy these because they sure knew that these were false, whatever, it wasn't high enough for them. Again, when are these people gonna buy? If they didn't buy this, are they gonna buy here when it goes over here, for example? Let's say, okay, they make 120%. Let's just consider that. And you have some guy that's just averaging down. Again, I'm just assuming this is the sector overall. Averaging down. Well, that's 245%. At the bottom would be 433. You do some stock picking. You have some more like real juniors, I was gonna say. And again, assuming most people are not gonna. I mean, take. I mean, a lot of people. They're in cash. They have whatever. Whatever. I'm playing with my entire net worth basically all the time. So I'm gonna blow past anybody anyway, kinda, because I know what comes next. I know that the next big move is up. Uh, and again, when these people start to get in, I'm already gonna be up. I'm already gonna be up. It's like I think the hodl folio is. I think all hodl folios are green over the last 3 years, for example. But I'm getting better and better. That's the thing. I'm getting constantly better and better. And for them, I picked much safer plays. For example, I mean, I personally have, Condor, for example, went down 60% or something. They actually had a big position as well, not as big as one of my portfolios. So that stung, for example. But it comes with the territory. The ones that work out, I'm gonna make a shit ton on, like Snowline. But my point is that okay, let's take a hodl folio for example. Maybe they're up 40% over the last 3 years. Okay, at these levels, or I should actually use because they're mostly in junior. So let's say Bear Creek. Let's say my portfolio is, or some hodl portfolio is up 40% over the last 3 years. Let's say some other of these guys, they're up 300%. I'm just guessing here, up 300%. Okay, I'm up 40%. They're holding off. They might be buying here again, and they get 250%. It's like that's actually great if they were able to do that. But let's take it even higher. Let's say they get in here, whatever. Higher highs, higher lows, and all of that sort of stuff that people judge. If whatever the trend is. If I'm minus, or if my hodl folios are plus 40%, if I ride it to the same level, I'm gonna make 1,000%, a 10-bagger, whereas they make what, I don't know, 170%. And this, I'm not counting a real bull. I'm talking a bull leg here. If we're talking a real bull, this would go a lot higher than that, and from this low it would just be obscene, 20 baggers and stuff. I wouldn't be surprised again if I still made more money, and I can continuously do that because I'm not just all in 3 stocks in a raging bull market where everybody and their grandma basically are in the same stocks. I don't want something that only works and only gives me money literally in the, let's say, the biggest bubble there is. It's the same for these crypto guys. Most of them only know crypto. Most of them have only made money in crypto. Most of the guys that are, and I know some personally, most of the guys that are in Bitcoin and that has made money in Bitcoin, that's the only thing they own. Can you imagine how risky that is? I can understand why they keep want to be in Bitcoin, because again, that's what has treated them well. They made a lot of money, let's say, in Bitcoin. So their recent past, if they owned it for 6 years and they're up a lot, whatever, or 10 years, they've been taught that every dip is a buy, and it always works out. The thing with Bitcoin is obviously that it's like 14 years old, never seen a monetary collapse, for example. Nobody has any idea what's going to happen with crypto when shit hits the fan. We're gonna know shit hits the fan, in my opinion, when you see crypto down 90%. But anyway, my point is that they have never taken the time to actually learn to invest. That's why they're sticking to Bitcoin and crypto, because nobody can say what the value is. It's basically the most impressive greater fool trading sardine that's ever been made. It's genius in a sense. It's the perfect trading sardine. Because nobody can tell you that it's worth X or Y. In the junior space, you actually have economic studies and so on. you have something tangible that translates to an economic business with a certain value, and you can relate that to price at any given time because the market quotes us a price. There's actually something where it's like reality matters. Reality doesn't really matter in 99.99% of crypto because, again, there is no anchor. There is nothing really that could be seen as a margin of safety. It's just a pure trading sardine. So what happens if you're up? Let's say you become a millionaire on Bitcoin. And you only own Bitcoin because Bitcoin is the only thing you know. You don't know anything about value investing because if you were a value investor, you wouldn't be in Bitcoin. Just ask Charlie Munger, or he's dead now, but what he said, or Warren Buffett. They absolutely hate that. Of course, they hate gold as well. But from a business standpoint, that makes sense. Because gold doesn't create wealth. It just preserves it. Gold mining, that's actually a business. That's where I am in, to make money. Physical gold is to keep money. And of course, the way you actually can get a lot of purchasing power is that everything collapses relative to gold. So you don't make anything per se, but it's almost like you became wealthy. It's just that everybody else lost everything. So in a sense, you get rich, but you don't, or you make a lot of money, or you get wealthier, but it's not from gold really doing anything. It's just that everyone else's assets go down. So relative to everyone else, I mean, or let's put it like this. Let's say I had $1,000 in my bank account. My whole neighborhood had $1 billion. So I'm poor. Or let's say, yeah, I have a gold coin worth $2,500. That's the only thing I own. Everybody else has $1 billion in bonds in my neighborhood. Someone hacks it, or something, a cyber attack or whatever. What's the name of, EMP weapon, or simply that there becomes hyperinflation. So all those $1 billion in bonds that everybody in my neighborhood has goes down to zero in real value, and I have a gold coin. I didn't get more gold. It's just that everybody else lost everything, so now I'm the rich person in the neighborhood, even though I still only have my gold coin. So that's a completely different thing. That's not actually risk for wealth creation. That's no risk for keeping your wealth, making sure you keep your wealth. So those are different things. So from that standpoint, it's not super weird to hear Warren Buffett say something like that, because in a sense, it's kind of right, because it is not a productive thing. And over the long term, typically, especially with his track record, he makes more money with his investments. And if he's diversified, and he owns candy stores and railroads and whatever, he has a bunch of real stuff as well. So which is going to be worth something. I mean, it's like in the Weimar Republic, it was agriculture and gold and stuff that really went up in value. Everything everybody actually needed and real stuff went up in relative value. So farmers made a lot of money, for example, or I mean, they got rich because they had this thing that everybody would pay some price to get, because otherwise they die. So yeah, and of course can anybody see some kind of don't I have Kiffer? Let's do it like this. A bit of a cleaner chart. Can anybody see some kind of pattern here? This is not rocket science. Okay, we know it's a cyclical sector. That here everybody has bought, and the ones that buy the latest are the increasingly some momentum traders. Up here, maybe the taxi driver actually bought. Okay, down here, the taxi buyer sells out, or here, whatever. I can see a pattern of very limited but absolutely brutal or violent periods when the stocks almost go vertical. Here we had a sell-off first, but let's do it like this, here and then here. So this is basically your, and of course there's some whatever you would call this, like bull trap or something. But it's like there's some serious short-term rallies that retraces pretty much all the losses. Assuming the stock is around, let's say, assume it's somewhat has kept its value, and it's a, let's say it's a kind of a fixed trading sardine, a beta play. That's how this sector operates. Short period of time, nobody has absolutely any idea when it happens. And the funny thing is, do you know when this rally here was least expected? Well, easy, it's down here. If the market had any clue whatsoever that the price was going to be up here in just 8 months, the price would already be here. So a rally at this point, this is when the fewest amount of people in the sector thought a rally was possible. Same obviously here, same here, and same around here. By definition. So, do you see some other stuff? Well, I would say... where is... I was going to say, you kind of have this. This is a weekly. Let's do it on a daily. You kind of have this, zigzagging, sharp sell-offs from the tops. Basically, then it's like starts to, I don't know, pan out, let's say. Okay, here we have dropped to an even lower level, and then it's like zigzagging, but it's like it doesn't change too much in price at the end here, let's say. Oh, here sharp decline. Okay, then just a brutal zigzagging, lower, but it stops going down that much. Stops going down, it just bores people to death. Bores people absolutely to death, and obviously nobody has seen a rally for quite some time, so nobody believes it can happen. All of a sudden, from out of nowhere, it starts going up, and then boom, flash crash, whatever. Nobody can predict that anyway. Silver squeeze top, boom, down quickly, and then we have this kind of flattening out again. I think I had... Yeah, so basically, I mean, like this. Because this is what I heard this week. They're low, they've been low forever. Okay, when do you think I hear that stuff? Or when do you think people write that stuff? Here, for example, the bear market is at its peak length. So nobody sees it as going down forever more than the last day of the downtrend, obviously. Because it's gone down a longer period of time here than here. Longer here than here, whatever. We know we're getting closer to the inevitable uptrend, but fewer and fewer believe it. And again, listen to why people. This is a quote from someone. They're low. They've been low forever. He's just belly aching, obviously, but basically he's trying to convince himself why he shouldn't buy. I mean, does this sound like someone who's whatever, a Rick Roulette, like, oh, or I was going to say Frank Gooser's, like, I've never seen this sector so cheap, or Ross Beatty says the same thing, I've never seen this sector so cheap, and they're all ecstatic about it. It's like, according to, a pretty recent interview with Ross Beatty, where he says he didn't even plan to go into investing or invest in juniors again because he's getting old, but he can't help himself. Does this sound like somebody that is so bullish that he can't help himself but buy? No, absolutely not. This is obviously, again, he's looking at what has happened, and that's dictating what his belief is for the future. So he's pricing in this. That happens every time. They're low, they've been low forever. They're low, they've been low forever. That's what it felt like here, that's what it felt like here, that's what it felt like here. If it's not... obvious, there is almost no chance of a rally happening anytime soon priced in. The next rally will come as a black swan, which is hilarious given the fact that it's a cyclical sector. I didn't make people like this, but that's how it is. At every low, everybody forgets it's a cyclical sector. At every high, people forget it's a cyclical sector. Now, I'm not good at selling because I'm always fully invested. I'm going to talk about value shuffling, in short, again, I think the merit of beta is going up. I think the merit of diversification is going up, and I think the merit of early stage exploration and concentrated portfolios is going down relative to the other ones. So up here, you would kind of do best by being concentrated and more into the alpha plays, the if stories. Why? Because if you're only in when stories and diversified, you're going to make sure that you're going to go down with the actual, the sector move. But if you have, let's say, I don't know, 10 stories and they might be valued at relatively high valuations, but they can still, over the next 3-4 years that this bear market persists, they could theoretically actually go higher. Like we've seen with Snowline, Amex, I would say, is another example. The gray, possibly Ramp Metals. I don't remember everyone, obviously. And it's like Great Bear before that. And so there's certainly a few, some certain stocks that go up in bear markets. So in that case, when you know the next big sector move is down, obviously you should spend more time, picking out the best of the best and the ones that can create a lot of value. Down here, it makes more sense to actually be more into the ones that have already created value, which cost more to drill up than you can buy it for in the ground. And they have obviously beta in that case, and they will follow the sector move up. So if you're diversified down at these lows, and let's say you're in place that have already proven that have something, then it's a matter of when, not if, your portfolio is going to be in the green big time. If you're in just a few exploration stories from these levels, there's a chance that they all might fail, or some might fail at least, and you have no goal to revalue for the upswing. So imagine you had 30 different developers trading at 52-week lows. Let's say they're trading for 20 ounces in the ground, and typically ounces in the ground that peaks sells for $80 to $100. Then your portfolio, assuming not everyone is going to go bankrupt, you do some due diligence. That's a 5x swing you're just waiting for to happen. If you're in just a select few exploration plays, they are high risk. Maybe 60% of them won't make it, and then there's still a possibility that the two that make it, especially starting from very low levels, you can still have a very good return. It's just a lot more stressful, and I would say it's riskier, because if you only have a few stocks, there's a chance that only one in 7 will actually make a significant discovery and stuff like that, and have the power, let's say, and the backing to break through the dilution cycle. Because let's face it, if you can buy ounces in the ground for $20 here, and you're into explorers that will drill it up for $40 per ounce, you're kind of paying twice the amount of money that you can just buy the stuff for. So it makes little sense unless you have very low drill costs, for example, or exquisitely good targets. I would only really bother with tier 1 exploration plays right now, and rather buy the tier 3, tier 2 deposits. Okay, let's end with this is basically a point. Let's end with some quotes from some billionaires. This is from a month ago only, where it was uploaded.
They're going to have a discovery, and then they're going to disappear.
Basically, this. Okay, I can rewind a bit. They get asked by, or Lasson gets asked by, I think her name is Danielle, about juniors, and he paints a very bleak picture. Let's actually rewind a bit, and I can fetch some water.
Up where the real money is going to be made is going to be the intermediate and the senior that already have production. Because even if the gold price goes to 3,000, the market is not, the producer are not going to respond fast enough It's going to take 10 years for them to increase production, so you're just going to have even more demand. So that's the reality, I think, that we're facing in the industry.
A gloomy outlook for the juniors, Pierre.
The juniors will be fireflies.
Fireflies.
Yeah, they're going to have a discovery and then they're going to disappear. It's going to be really, really difficult to finance any juniors over a long period of time unless they have a very strong backer, someone or an organization or a fund, a family office that is there to support them.
Interesting point you're bringing up here. Frank, Robert, I'm interested to know if you agree with what Pierre's saying.
Yeah, I do to a certain extent, but I believe that we're suffering sentiment right now, and the sentiment is as bad as it's ever been in terms of the sector. I think if gold breaks through, Pierre, the old highs and stays there, finds a new level, I think the sentiment will come back into the juniors. It's like everything else. When you and I had this conversation in 2001, and let me remind you, we were sitting at the King Edward Hotel in Toronto. I was trying to talk you into creating what was eventually going to be Wheaton River, and I was saying gold was $250 an ounce, and I said, and I had a thesis that gold was going to go higher, and I said, Pierre, it's going higher, and you said, Frank, you've been out of the business too long. It's terrible out there. It'll never happen. That's what you're fighting. Even us industry people are getting discouraged. And I think you have to step away and watch what's happening from the outside, look in. It's a sentiment thing, because there's real value there, and eventually it will be discovered.
So, that's a very interesting segment, I think. Lassonde paints a very bleak picture that they will be fireflies. There's like some juniors, if they make a discovery, they'll get a reaction, a pump on the news, and it's like deservedly so. Let's say, that they might be on something. And then he means that, well, there's not going to be enough capital, so they're not going to really be able to raise, so they're going to be just keep diluting. Meaning there's like they won't be rewarded enough to keep the share price going up and be able to fight the dilution, basically. And then sooner or later it's going to keel over and go down like those, a lot of the dreadful shorts. So earlier in the interview he calls it the killing fields, the developers, because it takes longer and longer time to develop stuff. So 30 years ago it might take, let's say, 2 years to permit a project. Perhaps. So if you have an advanced project, there's only 2 years from, you have to construct it as well. But let's say 3 years from, in terms of the boring period. But now I think he mentioned that, now you might have, 6-8 years or something. So it's like, he's got a point in that, obviously. If a mature project, if it takes it 4 years, 3-4 years to permit, then 1-2 years to build, that's a heck of a long runway of not much exciting happening. But he also again points to like not even the discoveries will work, etc., etc. And then Frank Gustra comes in and basically suggests that he's too bearish, that he's too colored by the sector's recent past, the recent 4 years. And he reminds Pierre that when he tried to pitch the idea to build, I think it was Wheaton River back in 2001, the last time we had maybe a scenario like we have now, when the sector was this cheap, for example, Pierre was skeptical because he said, no, it's over, the sector is never coming back and all that. He got him to do it, and they made Wheaton River a massive success over the next several years. And that later merged with Goldcorp, and later Goldcorp became the largest gold company in the world. Imagine that. Of course there's some luck into that as well, but that's an interesting thing that Frank Gustra suggests that Pierre Lassonde he's too colored by it. He's too affected by the sentiment. Pierre Lassonde doesn't even see any reason to be bullish, juniors, basically. Whereas Frank Gustra, again, he's bullish because he knows it's just a matter of sentiment, that you can't, that it's in a sense a bullshit market right now. I think this is a very, very interesting segment, but there's more stuff. Here's Frank again.
Someone this morning, I said, if I had infinite... This is a moment to really start building something new and something big. Listen, I said this to someone this morning. I said, if I had infinite resources, if I were Bill Gates, for instance, I don't have Bill Gates' money, but if I did, I would be buying control of so many companies right now in our space because they're the cheapest I've ever seen them. The relative value between the commodity, in this case, say gold, and the share prices of the mining companies, there's such a disparity right now. This is the buyer's market. The sad thing is that for most people, that is a problem because you can't access capital. So it's not easy for people that don't have access to capital to compete. But if you had infinite resources, now is the time to buy everything. The second thing I'll say is that my experience, and I've seen so many markets since 1978 when I first got in this business, every time you're in a market like this where the sentiment is so bad, although you know that it will change and get better, inside you feel like it will never get better. And I still go through that and have to slap myself and go, come on, you've seen this before. And it will always change. Now we're in the depths of lack of interest in the gold mining sector. That will change. And it might change suddenly, overnight, with the price of gold doing something extraordinary, which could happen. But the current state of the market right now will change. If you're an investor in this market, all my suggestions, you buy something of high quality with a good management, just sit back and wait. Don't worry, it will change, it will come back. These things will get revalued.
Excellent segment again. And he even he literally points out the fact that even the veterans, even the smart money, even the billionaires, even the people who have seen this more times than any basically retail investor, certainly more times than myself, probably more times than anybody, maybe listening to this podcast, for example, even he has to slap himself and remind himself that this is exactly how it feels every time. And going back to they're low, they've been low forever. So I find that extremely, again, listen to this guy and look what he's doing in the market. This was September 26, 2023. So it's almost a year ago. And obviously it would be easy to say, he said that then they've gone down more. Sure. Some are down. Some are down a lot, some are actually up, some are down quite a bit and all that. But it's like, that's the thing. You don't need perfect timing. And he's making moves right now. So let's say, okay, he started off being this bullish when they were already super cheap. Like he says, he's never seen it. This sector has just become even cheaper. And he did an insider buy 2 days ago or something. In a gold developer. This is kind of what how I operate. I don't try to predict the bottom. When we're close enough, I especially get bullish. The cheaper it goes, or the lower they go, the cheaper it gets. I'm just going to make even more money in the future. That's the thing. So he's doubling down. He's not, I was a year early, so now everything is, goes out of the window. No, but note that he says he has to slap himself because he feels like it will never end. And that's kind of what he pointed out to Pierre as well, that he's colored by the sentiment. Pierre feels like this will never end. Whereas Frank Goostraya states that it has always changed. So he's betting on a thing that has happened 100% of the time before in history. And it's going to happen again.
At this conference, there's been a lot of debate on, gold's at all-time highs, gold stocks are lagging. What's your thought on that?
Well, they're starting to catch up slowly. I always said I didn't think it was going to take this long. I was actually quite surprised that there's been this disconnect between the gold equities and the gold price. But I was saying all along, and I've said it for a number of years now, gold had to reach a new level and stay there before people truly believed enough that they're going to start buying into this sector. And it's just starting now that gold went through 2,300. You're seeing it now. I'm seeing the stocks that I own, and I've got a portfolio of senior gold producers that paid nice dividends. And so I've been watching them. And the seniors obviously moved first, and now the junior producers are starting to move. And next will be the developers, and the explorers will be last, obviously. But this is happening. And here's the thing, guys. I'm certain most of you in this room, a few years from now, are going to look back at this moment in time, and you're going to kick yourself that you didn't buy more gold stocks. And because they're going to go up, and it happens in every cycle. I've seen quite a few cycles in my lifetime, and I know how it works. And you're going to see gold's going to go do whatever it does, and the gold stocks and all of these, the juniors, the developers are all going to move, and they're going to move substantially, and they're going to move very quietly at first, and then they're going to at some point go parabolic. And you're all going to kick yourselves that you didn't buy it because you don't believe. And it's very hard to believe when you're sitting here and you haven't seen it for so long, you haven't seen a gold market for so long that you can't believe that it's actually going to happen and that these things will ever see the light of day. And I'll give you a great analogy of this. So in 2001, when I was doing Wheaton River, we struggled to create a $100 million valuation company with an acquisition we were doing. It was $100 million. We struggled with that. 10 years later, that company was worth $50 billion at its height. And that's an extreme example. Obviously, you're not going to see that often. But you will see stocks that today are trading at 75 cents will be trading at $10 and $15. And that's just how these cycles work. And these bull markets climb a wall of worry. And everybody, so the trick is to believe before everybody else believes. So believe now, avoid the rush, and it's just, but you have to understand why you believe that. And I have my own conviction about this, and it's going to happen. So I think the first part of the rally in the gold juniors will be a very small select number of investors that are forward thinking and really can see the writing on the wall and how this is going to play out. And it'll be a stealth rally, and then FOMO will kick in at some point. And then you get the people fearing that they're going to miss out, and then they're going to pile in. And at the end of the day, you get all the crazies that miss the entire run, and they buy at the top. And it happens in every sector. You've seen it happen with almost every other industry. So that's going to happen. And and mark your calendars. I said it here first. Let's talk about this a year or 2 or 3 or 5 years from now. And you're going to look back at today's prices and go, holy cow, I could have owned that at 70 cents or $4 or whatever's trading at.
I think one thing now too is
Again, very good points, and simple enough. It's like believe before everyone else believes, because this is the thing. Again, I'm just going to go back to people that have, I hope there's a street sweeper outside. I hope it's not too much noise. I'm just going to point out. So this is NVIDIA. Maybe I should do log scale actually. And this is what everybody's talking about, and yada yada yada. Do you believe a lot of people bought it here? I doubt it. Because if the market knew it was going to be up here, it would never have been down here. And of course people are, I mean, let's face it, if somebody went all in NVIDIA here, for example, they still made 200%, more than 200%, if they went all in. And it's like, oh, Jesus, I made 200%. Let's say even 300%, if they again went all in. Otherwise, if you would have a diversified portfolio, it's going to be damn hard for NVIDIA, even with a rise like this, to have any, super meaningful change to your financial life, let's say. If you understand what I mean. It's like, a 10% position goes up 370. That's great, but it's not like, oh, I six-bagged my entire portfolio or something. Unless, again, you're kind of all in or something. If you're a real risk count, which I believe a lot of people have been, hence why we have so many bubbles and all of that, hence why Nvidia has been such a crowded trade. Then I go back to, my thing with crypto. Let's say you made money taking such huge concentrated risk, let's say, in a bubble that has worked and worked and worked, and Fed saves the market all the time and whatever. And I see that on the Swedish finance Twitter, because Swedish stock market has been doing really well as also. So you have a bunch of people that think they're really smart, even if they're all in Nvidia, all in Tesla, or all in whatever, semiconductors. So they think they're genius. Like, this is so easy. I remember during the junior mining highs, people thought it felt really easy. I remember in the top of 2020, I remember saying to my brothers, like, it's like printing money. Because there was no real news out for companies, but they just kept going up when they had already gone up. And they just kept on going. I had some, up to that point, my biggest paper gains, my biggest weekly paper gain ever during the 2020 high. And again, not because some discovery or anything like that. No, it was the portfolio had went up with the sentiment, and then it just kept going. So, at the end, when you have 10% days, for example, that's from an all-time high, 10% of a portfolio at all-time highs. The thing is, just imagine that this is the Nasdaq now. This is the 2020 bubble. Oh, this is actually Nvidia. Okay, I should use. Let's use Nasdaq. Again, the broader markets has been in a very easy period. Fed and all that comes to the rescue as soon as there's a hiccup, huge money printing during COVID. There was huge money printing. We don't know exactly where we are, and I don't try to predict a top in Nasdaq or anything like that, because as we're seeing in crypto, a bubble can keep going a lot longer than people believe. The thing is, sooner or later, it tops. Here was the top in Nasdaq 2000s. Super good, super easy market up until that point. I mean, from this period here, 830. I mean, it's just unreal returns. Nasdaq up 837%. How much has it gone up from these lows? 1,365%. I thought it would be less, actually. But it's like, my point is, long periods of absolutely abnormally good returns, absolutely killer returns. That's going to get more and more people. The longer it has worked, the more people get in it, right? Okay. So what happened after the Nasdaq eventually topped? When there was no greater fool to buy? Well, went down 80%. And it took from 2000 to 2016 for price to get back to the recent high. So there was a 16-year-long bear market. Well, I mean, depending on what you call bear market, I guess, I mean, kinda after just 2 years, it kinda became a bull market, actually. But, okay, point is that if you were all in up here, you made a lot of money up to this point, you start to pricing how much you're gonna make. Obviously, I mean, the people who had their portfolios go up 500% over this period of time, believe me, they were thinking that they were geniuses. They were thinking this is so easy, just pick a sector that works. Those are actually headlines I remember seeing going into the 2020 flash crash. There were articles in the Swedish online papers about people making money, again during COVID. again during the same period that this guy found tech stocks, who I was talking to on Twitter. They thought it was so easy. They were like one-liners such as, "Oh, I just buy a good company that's in an uptrend." That's basically what the gist of it. A good company in an uptrend. Then COVID flash crash happened a few weeks later, whatever. All of a sudden, sheer panic. And I can bet you that, again, it's easy to say you're going to buy the dip when everything is going higher. You see it in junior mining stocks as well. People like, "Oh, I missed something has gone up 50%. I'm going to wait for a dip." And then maybe it doesn't go down. It goes up 50% more. Then they buy. Then the dip comes and they're like, "Oh, fuck this." My point is, it's irrelevant. The opportunity cost, people see this as opportunity cost. Opportunity cost is not looking at a period of time and say, "Oh, I guess there was opportunity cost here. Oh, it should have been in tech. Should have been so easy," like that guy said. It's the easiest trade of his life. Like, why? Maybe because it just kept on going up because more and more people got into it. Believe me, the junior mining sector feels super friggin' easy during a bull leg, because it just keeps on going. But the big money is not when the sector is obviously trending. The big money is not made in a bull market. Think about that. The big money is not made in a bull market. The big money is made from buying in a bear market that becomes a bull market. When did people know this was a bull market at any point in time? I mean, people don't think this was even some would argue, and I mean, looking at Bear Creek, could almost agree, that it's been in a bear market since 2011. That's kind of crazy, right? 13 years bear market. So when does anybody know it's a bull market? No. Again, nobody has an idea when it's a bull market. Is it when it surpasses this high? Is it when it surpasses that high? That's not when the money is made buying in the bear markets. Buying in the depths of the bear markets is when the big money is made. It's not actually in when everybody sees that it's a bull market, the big returns are already gone. Even again, I'm not saying that this isn't a great return. Well, okay, that's not superb, but or I should say, in this time frame, it's superb returns to have that in 170% in 1 year. But let's say here, it's like, okay, now people believe it's a bull market, and let's say people make 128%, and they're like, let's say they buy in here because now they're convinced it's a bull market. Okay, they buy here. Feel super smart, they're like up 109%, and they're like, I'm sure glad I wasn't in this sector during the bear market or whatever. Well, let's say you have another guy actually started investing here. Not the top, but it's like here. He just buys and buys, and I'm not saying Bear Creek Mining, but it's like the sector overall. He just buys and buys and buys and buys and buys and buys and buys more the lower it goes. Maybe his average went from here to, when all is said and done, his average is here. This guy might have avoided the big crash, but he's going to make 108% of greater fool trading for a while, because it's not long after that it's going to be in the red. This guy that bought all the way down, he's going to be at least at 346%. And the best thing you can obviously do after that is not try to buy too much, or at least not beta at highs, and rather buy it at lows, and you're going to make even more money. So when you think about it, when you think about how predictable this sector really is, actually I'm going to... Oh, my neck is killing me. When you think about how predictable the sector really is, rally, crash, rally, crash, rally, crash, rally, crash. in a sense, it almost should be illegal for anybody to lose money over, let's say, what's this, 2011, 2016? Let's say 5 to 8 year period. To lose money in a 4-year period, we can see how easily one can do that. Okay, if you got in at 2020, what has happened since? 4 years of a bear market. Brutal one as well. Excuse me. Ugh. Let's say you bought here because you were following the trend. At least like, what's that, like 2-3 years, 3-4 years of a bear market. So again, I know how it is. Most people, like everyone else, including the people that are, have made good money in Nvidia, they bought when the bull trend was already well in motion, and if they're lucky, it just keeps on going, like it has done for Nvidia for quite some time. But you don't know how close Nvidia is to just topping out. In this sector, the legs typically are very short. They don't go on for 3 years, or not recently at least. I mean, there was a bull market, one could say, from, okay, this wasn't around then, but from 2001 to 2011, or at least 2001 to 2008, the mining sector was actually in a bull market. My point is that what I'm trying to drive home is that if you bought these highs, there is nothing magical about you being down. Probably a lot. That's nothing magical. Almost everyone is down over the last 4 years. Almost. But if you can get better and better and better, the next time, if this sector goes like, we don't know when it's actually gonna turn around, but let's say it's, it starts here or whatever, or it has started, nobody has an idea. Maybe this was the low. Nobody knows. Next time, you're not going to be starting to pile in here. If you average down during this, you're going to be in the money come this top. Hopefully, you'll get better at stock selection. Hopefully, you'll, maybe reduce your beta, as beta goes higher and higher. Going more maybe concentrated, I'm not going to say weird, but like more stock picking, let's say, more. Okay, now my mic is back. Maybe something happened with the what was I going to say? Anyways, like, okay, we reduced the beta because now the obvious move is not up anymore. Now the maybe obvious move is going to be down for especially beta. When it goes down, maybe you pick up some more beta, but you don't know when it's going to turn down or whatever. My point is that investing is obviously a marathon, not a sprint. So I can tell you right now that I expect to make more money from top to top than the people that actually didn't even buy the top, and they're gonna buy when they are convinced it's a bull market. I have right now, for example, I've never had more money invested in the mining space. My portfolio is close to all-time high in value, and obviously that's because I as soon as I get money, I basically invest it. I'm not saying that's what everybody should do. That's what I'm doing. I'm okay with the risk. I mean, in a sense, I'm a bit crazy. But if we're down here, I only need one bull leg, and I could maybe I could potentially retire right now, but I could probably quite comfortably retire at the next peak. And then you have again the Johnny come latelys with their trading antics that they're not going to convince it's a bull market until, I don't know, it's up here and they make 110, 120%, and myself from an all-time high in terms of portfolio size might be up 341%, if you get my point. So that's what has worked for me. What's the saying? Don't fix what's not broken. So yeah, and again, I know, I understand it's not for everyone. It's like I have a huge appetite for risk in a sense, and I'm very, very good at buying low. I bought this low, I bought this low, I bought this low. Well, this was over so quickly, so I didn't have much time, but I think I did some value shuffle. And I'm buying every day since. And of course, the beauty in a sense, is that this sector actually spends 80% of the time going down. Again, you can see this kind of quick correction, and then it kind of, quick correction, and then it at least, zigzags and then crash again, but it's like zigzags. And note that it's like, even though it doesn't look too much, but I mean, these are quite, I mean, if you're down whatever here, it's like 50% just from here to here. So it's brutal in that sense, absolutely brutal. Absolutely brutal. You can be down 80% in a position and you can still make money on it. That's the funny thing. But you spend more time in a bear, or we have spent more time in a bear market, especially if we believe that since 2011 it's more or less been a bear market, and we've mostly seen bear market rallies, let's say. Obviously, it means you're spending more and more time buying low than high, because in this short time period it's already down here. So if you bought monthly, you only got like, one or two buys during this move down, but then you got, I don't know, it's like 1, 2, 3, 4, 5, 6, 7, 8 buys down here. So you bought the average of your buying would be a lot lower than, the peak here might be down here. So you're already in the plus on those buys here. And again, this was also very sharp, so maybe you were able to make one buy here and one buy here and one buy here and whatever. And all of these are in the green already, and now we're down here again, but this has also been a prolonged one. So obviously I don't recommend being only trading sardines all the time and just ping-ponging. But I'm looking at beta right now, for example. Again, when opportunity cost, oh Jesus, I've been ranting. Okay, I should have probably wrapped this up. I hope you got something out of it. And again, I would just recommend, listening to some of the stuff these guys say, because it makes perfect sense. And if you think that's bullshit, you can just, look up any cyclical sector, any commodity, and you can see the exact same pattern. They crash, they rally, they crash, they rally, they crash, they rally, they crash. And again, at every bottom, nobody expects a rally, and at every top, nobody expects a bear market. That's gonna be like that forever, because that's just human sentiment. That's why at every time they say they're low, they've been low forever. I don't feel like buying because they're gonna be low forever. So every single downtrend and uptrend gets extrapolated. So people do not buy here. Nobody buys here because they think this is in the cards. Nobody buys here because they think that is in the cards. Nobody buys here because, just listen to everybody who's talking about downside risk. Oh, the markets can crash and the miners can't go down. Yes, so what in a sense? This was 2009, and this was actually starting off at much lower levels anyway. It's like, okay, oh Jesus, this is an 81% correction. Did it matter in the end? Let's assume they were actually cheap here. They went up 465%. It just means that before they went up a lot, you could have made even more money. So people who are dreaming about, people wish, believe me, you're probably one of them. People wish that the bear market actually stopped here, for example, more preferably than have gone like that. So they wish it would have gone like this. Almost nobody wishes it has taken this way. That it didn't bottom in 2020, that actually we've seen lower prices. Well, since I'm buying monthly, it means I'm getting more and more shares, more and more control, more and more control of finite resources. So if we go like this instead, I'm actually going to make more money. I'm going to have a higher position. I'm going to start off from I'm going to lower my average with a bigger position. and have even higher returns from all the buys that came in lower here. So let's say I can increase my position by 10%. That's pretty good. 10% more, lower average. So I have a bigger position, and I'm going to make even more on the bigger position. That's what everybody misses. They don't see the bear market as the blessing it is. They see it only as a curse. Even though, as I said earlier, the big money is actually not made in a bull market. The big money is made in a bear market. It's just that you can't see it yet. Nobody thought about making money in miners down here. The idea of anybody making miners down here was non-existent. And then it went up 600%. That's just how it is. And you can, again, I would very much recommend, look how people act on Twitter. Look how people act in the forums. Look what people write. Look how few of them, look how many just state the fact. It's low, they've been low forever. How many do you see actually like this, okay, I know it sucks, it feels bad, like Frank User says, it feels like it's never going to turn around, but it always will, it always has, and 100% chance. So I'm gonna double down. This is great. Or Ross Beatty, he can't help himself. He didn't even plan to go into juniors again, but he can't help himself because he'd never seen them that cheap. Some of those comments come from billionaires who made $1 billion investing in a cyclical sector like the miners. The people on Twitter are not billionaires. I'm not a billionaire, but if I'm agreeing with the billionaires, I think I should be pretty okay. It makes perfect sense to me. It makes perfect sense to them. Great. I would rather be with the select few that has made money in this sector right now, be on their page, see what they see, instead of the 99.999% that don't see it, that don't agree with me, that are not billionaires. I mean, it just makes total sense. Because so few are billionaires, so they have to be doing something that nobody else does. And right now, that's buying. Where everybody else just complains that they're so low. Nobody says, oh, they're so cheap, I cannot believe it. I'm going to make a fortune in this sector. Like Frank Ustra said I don't know if I had that in one of the clips, but during one interview he says, if you have conviction now, or people who have conviction now are going to make a fortune. I stand with him. That's what I believe. That's why I'm super bullish. I started buying, or I started to get quite bullish. Well, I'm always bullish, but it's like from a price to value perspective, it's like I just gotten increasingly more bullish while I've been looking increasingly more wrong on average. That's not an easy thing to do. Because like the conversation I had with that gentleman today on Twitter, because they equate it as being wrong. Whereas again, I don't give a shit about this move here. I care about where we're going from these levels. So I just get increasingly more bullish. Anyway, that's it. If I mention any stocks, assume I'm biased. Not investing advice. Hit the like button and drop a comment if there's something you want to know about or like the stuff. Not a buy or sell recommendation. I don't own First Majestic. I don't own Bear Creek Mining. Thanks for listening. Bye.